Hello everyone and welcome. Let's dig into the market update for March 2023. First, let's start it off where the greater Phoenix area, we have 12 of our major cities in a seller's market. You'll notice here that 1 through 12 is listed, Chandler being at the very top and number 12 moving very slightly Peoria into a seller's market. You'll notice at the bottom, 16 Maricopa and 17 Buckeye, those two cities and Queen Creek are actually in a buyer's market, which means it's more buyers out there than there is sellers, the advantages for the buyers. And then Surprise and Goodyear are in a balanced market. Big things to note here is the changes from just last month. We do not trend with the rest of the United States. Greater Phoenix area is definitely making a change with their real estate, and we're starting to see multiple offers and other big pieces in this market. We're tracking back to 2015 levels, which is fantastic for anyone that's looking to sell their home. But, however, mortgage rates are increasing, and this could slow down the demand and push some people that have been looking out of their price point. Rate buydowns are keeping buyers in the game, however, and seller concessions, and they'll continue to be a part of the seller's costs until the rates are more affordable for the people buying the homes, which is something we'll talk about as well. Also, there is a less downward pressure on prices due to fewer new homes hitting the market. We don't have as many homes hitting the market as they think we do. Now let's talk about changes that we're seeing in the media headlines. New headlines this week have been reading positively. Metro Phoenix home prices are rising again. Scary market crash forecast debunked. Average sales price increase in January. All of these headlines are great for the Phoenix area, and it's giving a positive turn to what's happening. So let's talk about who's buying homes then. Owner-occupant sales are actually back to a normal range, which is at about 75%, providing the slowdown on investors and iBuyers like Open Door and Redfin. Also, cash buyers have retreated a bit, and FHA and first-time home buyers are stepping up. That's great news for those of you who are looking to get into the market but have a little down payment or not much. What's most important with you is that you're able to come up with a realistic plan that is a monthly affordability for yourself. Another big important piece to bring out for my first-time home buyers and FHA is that the mortgage insurance premiums were reduced significantly. That will be starting to take effect in March. So if you haven't lined up with a lender yet, or if you haven't talked to your lender in a couple months, maybe it's time to reach out and really start to sharpen that pencil a little bit and see if there is some savings that you could get with this premium being reduced. It could save some people up to $230 a month. That isn't a little amount, especially when every single penny you want is to be invested in your next home. So what does that mean for the market today? We are in the spring buyer season. The sun is shining, baseball is swinging, and spring breakers are coming. We can see the growth from January 28th to February 28th. The darker red area shows the increases of homes that are under contract. This isn't just people from out of state. This is buyers that were fatigued and buyers from last spring who are finally get a chance to step up. With 2 years or more of ownership still closed with a significant profit based on February sales per square foot measures. Remember, owners with 2 years or more of ownership still close with significant profits based on February sales per square foot measures. If you owned your home 2 years or more, you can expect about a 19% profit, 62% profit for 4 years or more of ownership, and 85% profit for 6 years or more. Something important to keep in mind is the headlines for the next 3 to 5 months and all those YouTubers that want to make the videos of everything's crashing. You have to understand that the year-over-year appreciation rates will be negative. The first and second quarter of last year in 2022 was bananas. We all know that. And we really do have to throw out 2021 and 2022 comparables. It's just not a realistic number. We are definitely not getting those numbers and those high prices that we were getting in spring of last year. Unlike 2008, people have more savings and jobs and less burdensome mortgage loans, with 85% of homeowners under 5% rate. What we need to keep in mind is there is not a pressure on price to the same degree as it was in the last half of 2022. So if you need to make a move and have prepared for it, then now might be the time for you to get your home sold and a new one bought. But if affordability is holding you back with the mortgage rates, then that's okay to wait. Make a plan, stick to it, save your money, figure out what you need to do. If you need to sign one more year of rent, then sign one more year of rent. But have that goal set that after that year, you're going to work with your real estate agent and your lender, and you're going to make sure that you're going to be able to make that decision maybe in the last fourth quarter or maybe in the beginning of next year to move into that home. But the decision needs to make sense. If you have any questions about this real estate market, please reach out. I'd be happy to help. I try to post something on here at least once a month, if not every other week, just to make sure you know what's going on in this market today in the Northwest Valley and in all of Phoenix greater area. Have a good day. I'm Emily Tyson with Launch Real Estate.